Hi everyone, this is Jason Barrick of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is the co-founder of Peak Prosperity. He also co-created the Crash Course, which was something that helped wake me up in 2008 and 2009. I began to question a lot of things that I had heard in the mainstream about energy, the economy, and the environment. And he recently put out a book in 2016 called Prosper, How to Prepare for the Future and Create a World Worth Inheriting. Dr. Chris Martenson, thank you for joining me again.
Jason, it's a real pleasure to be back with you today.
Yes, and I'm excited to talk to you. I've been following your work for years, Chris, and I really enjoy your perspectives on a lot of issues. So I want to ask you a big picture question first. So looking back from now, if I were to tell you in 2008 that global central banks would be coordinating, they would have created at least 18 trillion in money and credit, the stock market would be up 250%, the bond market would be in a bull market, a lot of real estate prices in major cities would be like the 2008 financial crisis, and the housing bubble never even happened, and yet here we are at gold prices at $1,319 and silver a little bit above 17. What would have been your reaction if I would have told you all this stuff in the last 8 or 9 years?
I would have said you were writing a science fiction novel, because clearly you'd have to go to a parallel universe to find people that stupid, because this is just absolutely, we're in the most ridiculous territory that anybody can possibly imagine at this point. Nothing matters in terms of prices. Every price has been manipulated by the central planners at this point in time. And I would have told you people aren't dumb enough to have gone through bubble one, the dot-com bubble, bubble two, the housing bubble, and have just sailed blithely into bubble three, which I'll call the everything bubble. It's like an everything bagel. It's the everything bubble. And so I would have told you there's no possible way. You need a whole generation for people to forget the pains and the wounds of the past one. But my goodness, you just can't go broke underestimating the intelligence of investors, I guess. That's lesson one. But really, I wouldn't have been able to predict, and I don't think anybody could have, that the central banks were going to go this far as they have. And that would have been combined with the most explosive revolutionary changes in market structure that we've ever seen. So I've just dumped on investors a little bit. There aren't actually that many investors left in the game anymore. It's all algorithms, and they are programmed. They follow what they're supposed to follow. The market structure is totally different than what it used to be. And I think it's actually child's play for central authorities now to manipulate markets. All they have to do is slam the VIX or buy a few futures over here, or just basically dump money into a place, and the computers will, like a school of piranhas homing in on blood, come in and do the bidding at that point. So I really think we're in very, very perverse territory, and it's just so hard to keep your bearings when you're in an everything bubble.
Yeah, it's Orwellian. There's just so many dystopian things going on right now. The European Central Bank and the Bank of Japan now have larger balance sheets than the Federal Reserve. I didn't think that was going to happen. The Swiss National Bank, the Swiss Central Bank, they're essentially a hedge fund now. They have over $80 billion in technology stock investments. They were at one point, speculating. They had over $1 billion portfolio on gold and silver stocks. I think they're the largest shareholder of Facebook. So these things are just crazy, where, these central banks are literally, because, they're running currency pegs, they're trying to manipulate their currency exchange rates with either dollar pegs or euro pegs. And they're literally creating, hundreds of billions, if not trillions of dollars out of thin air for whatever purposes.
Not just whatever purposes, but let's be clear, the Federal Reserve is the largest landlord in America right now by virtue of a $1.75 trillion mortgage-backed security portfolio. What's a mortgage-backed security? Well, it's a security backed by a mortgage. What kind of mortgages? Well, the kind you and I might have on our house. You mean my house? Possibly. It could be that, if you chase the string down, that the Federal Reserve owns my house and I'm paying interest payments and principal payments to the Federal Reserve. Wait a minute. How did the Federal Reserve secure for itself the right to be the title owner of my home in this story, or your home? Well, they did that because they printed money out of thin air. Read the Federal Reserve Act as many times forward and back as you want. There's nothing in there that entitles the Federal Reserve to print money out of thin air and secure the hard assets and the productive assets of a nation, or anything I'm sure that you could find that the Swiss National Bank should be rightfully allowed to print money out of thin air and buy the productive stock of productive companies. It's you say Orwellian, we need other superlative sort of descriptors to sort of get into this territory. But if we follow this game long enough, Jason, you know where we end up? We end up with the central banks owning everything, or the bankers owning everything, and everybody essentially working for the financial system. And of course, these are the sorts of warnings that we read about in the 20s and the 30s as people were debating the active role of a central bank, and we're warning about the trajectories and just the normal predatory aspects, but also the mathematical certainties that underlie fractional reserve banking. People like, oh my God, the Federal Reserve, largest landowner. I'm like, that's a travesty. Well, it might be, but it's also what we call a feature of the system. So rail against it all we want, but we have a broken money system administered by broken institutions.
Yeah, there's way too much myopic rent-seeking going on. To use a scientific term, I think there's a lot of entropy right now. There's the law of diminishing returns. But I think, there's so many different systems, Chris, whether it's the economic system, the political system, all these systems now, Chris, I think, and this has taken decades to change these things, these are systems built by parasites for parasites. And it seems that, there's unlimited money for basically bank bailouts, whether it was the European banking crisis last year, that probably should have been an enormous crisis, but it was probably papered over and delayed. There's almost unlimited amount of money for war spending, especially here in the United States. But when there's a problem, with long-term there's almost no money, it seems, for long-term investments here in the United States, like infrastructure. I know you're covering the Orville Dam. We're seeing what's going on with Hurricane Harvey. There's a huge infrastructure crisis in this country, but apparently, no one's willing to make the investments into it. But there's, unlimited money available for all the economic and political parasite projects.
Yeah, it's absolutely true. So, what you get is short-term thinking wins out over long-term thinking. And in short-term thinking, people care about quarterly profits. They care, is my portfolio up this month compared to last? We care about, am I going to stay in office 2 more years? We care about, how is this trade, deal going to be negotiated? Are we going to be one leg up or one leg down compared to China or some other country? Listen, it's all noise. It's all noise, because the rest of my work, Jason, is about the idea that everything that humans might do, whether we decide to, start 1,000-year-old Buddhist traditions with orange saffron robes and very complex sort of San mandalas, or we decide to make iPhones, humans do clever things if we have the resources to do them. And in this story, we're 7.4 billion people headed to 9 billion, and we're eating fossil fuels. And if you understand where we are in the oil story, you come away. I don't know how anybody can look at the data and not say, Houston, we have a predicament, not a problem. We have a predicament on our hands, because everything humans does is a derivative of having access to net energy. That surplus energy left over after we go and we get energy. This has been the fossil fuel age. And for all the people who think we're just going to somehow seamlessly navigate away from that era into the era of alternative fuels, such things as wind and solar, hasn't studied the problem yet, or the predicament yet.
You mean electric cars aren't going to solve all the problems like Elon Musk and Volvo are claiming?
No, not even close. And the math is really simple to run. You give me a crayon and a napkin and we can get it done. The issue here is that you have to understand that what is the source of energy and what is the energy return you get on that? And people go, well, Chris, look at the cost of solar. I'm like, I don't care what something costs. Look, in a world of manufactured money out of thin air, the costs are kind of irrelevant. What I care about is how much energy did it take to create the thing that's now going to create the energy. Here's a simple fact. As of 2014, last full year of data that we have out of the BP report for this classification, wind energy, if you were going to round it to the nearest whole number percentage, in 2014, what do you think the total global contribution of wind to the power consumption of humans was in 2014?
I've looked at it. I think it's zero.
It's zero, because it was 0.46 and you have to round down. Zero. That's where we are. Now look at what it takes to put a wind tower up, right? First, these big bulldozers come in and they scrape the pad, and then you have to pour, probably 100,000 pounds of concrete. You got 90 some odd thousand pounds of steel just in the base. Where did the concrete come from? Where did the steel come from? Do you know how many wind tower powered concrete plants we have? Zero. You know how much steel is made using wind power? Zero, right? So we have all these inputs that just magically show up, and then people put these wind towers up and go, oh, look, it's totally doable. I'm like, wait, you got to watch where the stuff came from.
Yes.
That's what people are missing.
Yes, and then the wind towers cause other problems because they're killing lots of birds if they're not put in the right area. So then there's problems with that. The other thing is that for a lot of these alternative energies, whether wind and solar, a lot of cases you have to use a lot of rare earth metals. And I'm sure you've looked at this, I've discussed this with you in the past. The mining of rare earth metals is not environmentally responsibly done by China. I mean, they cut all costs to the bone. The air, the water, the soil around all of these mines in China is totally toxic. And they did this so they could get a monopoly on mining rare earths and the value chain from all the upgrading of the rare earths into other neodymium iron boron magnets and other things. So they cut tons and tons of corners that other countries with mining would not have been able to cut.
Absolutely. They just, in many cases, they have a whole region where they just inject acid into the ground and then let it sit for a while and then suck up what they can and pull that back out. It's just absolutely an atrocious environmental practice.
So would you say then that all these systems that we're getting to the case of entropy then, where lots of energy is being wasted just to I guess the hamster wheel has to move faster and faster just to try to keep the status quo, and we've gotten basically to the point of where we're getting diminishing returns on almost anything we try, whether it's like Keynesian economic stimulus or other plans to just maintain the status quo?
Absolutely. I don't care where you track this. The macro data shows productivity on a per worker basis is down. Complex data series, hard. We can unpack that. We can show that farm productivity is really leveled out, and now Monsanto is introducing new herbicides because the old ones ran out and the new ones are supposed to be better, but it requires more and more effort to just try and stay ahead of the problems created by the solutions of yesterday. And so that is the very definition of entropy to me, which is where we're spending more and more and more energy and effort to just try and outdo what we just did in the past. And it's getting more and more difficult. And I don't know that Red Queen syndrome is any more obvious than in the U.S. shale industry. It's just the biggest Ponzi scheme foisted yet in the energy space upon the American people. I know so many intelligent, thoughtful people who've been completely taken by the PR campaign who tell me things like, hey, we're energy independent now. Hey, we're net oil. We're the next Saudi Arabia. Hey, American ingenuity unlocked a bunch of new hydrocarbons. And actually, every single one of those statements is wrong.
Yeah, I completely agree. I think I was reading your article last week, which is why the shale oil miracle is becoming a debacle. I'll attach a link to it for the listeners to also take a look at it. And there's over $200 billion still in shale oil debt. So one of the old oil adages is you don't drill on debt. But here we are, where it seems like a lot of these U.S. shale oil producers, yes, they've hedged some of them a couple years out at a higher price, but their hedges were hedged a couple years ago for some of them, and their hedges are running off, and the balance sheets are not in good shape, and their costs were lower, Chris, temporarily. I interviewed Art Berman last month, and he said one of the reasons their costs were lower was that the service companies like Schlumberger and Halliburton, those guys, were so desperate to refill their order books, they were offering 15 to 20% discounts to anyone who was willing to drill it all. So now that their order books are filled, they can raise their prices again. And the other thing about the shale oil industry I want to ask you is the cost. So, they have been able to cut costs. So we haven't seen enormous bankruptcies of these larger guys like EOG and Continental and Pioneer, et cetera, yet. But I think it's really dishonest. It's like the gold and silver miners, where they're on public investor presentations and in their financial statements, they're listing their cash costs and their lifting costs. Those aren't anywhere near all their costs.
Not even close. So there's a lot of sleight of hand going on, and they say things like, hey, we can produce oil for $20, $30, $40 a barrel, whatever the lie is at that point in time. And that's technically true if you're not including a lot of things, which could include very obvious things such as your debt service costs, maybe your leasehold payments, maybe your royalties, maybe your overhead that goes to paying staff and salaries, you name it, right? Listen, you just go to the cash flow statement, ignore the income statement. There's just too much hokey pokey going on over there. Cash flow statement, you're looking at just three big blocks. You have cash flow from operations, right? And then you've got cash flow from financing, and you look through this and you dig it up. And we discover that in the shale companies as a whole, looking across 80 companies, in every single year, 2008, 9, 10, 11, 12, 13, 14, 15, and 16, they had negative free cash flows. And that was under a regime where oil was anywhere from 100 to 90 to 80 to 70, 60, 50, 40, 30, wherever we were, right? So under every time period and under every price regime, whether that was on the cost side or the revenue side, they've been burning cash. Now, remember, these shale wells are principally depleted in just 3 years. So if you've been running this thing for 10 years on things that are 85% depleted in 3 years, somewhere in there, you really ought to have been spitting out some positive free cash flow, right? That's just, I can't find a single other industry, Jason, where you can say, here's a company that's just been burning forever and ever and ever across a whole industry. Amazon gets away with it for now. Netflix is getting away with it for now, but I can't find like the whole entertainment industry does this, or the entire retail sector does this. That's just, it's not possible for an entire sector to do this, but that's been true for the shale companies. And if they hadn't been able to tap the debt and the equity markets in these last 5 or 6 years, they would have gone belly up, because there's one chart I found. It's a wonderful chart. It was a nice study done, which showed that no matter what the price of oil was, the cost of drilling and producing that oil was just always a little bit higher than the cost of oil. So it tracks it, just not in a favorable way.
Yeah, I've actually asked Art Berman and other oil experts. I've noticed that these things, these shale oil companies, have been marketed by Wall Street very similarly to how technology stocks were marketed, where it's only revenue growth, production growth. So unlike some of these other oil producers, whether it's Deepwater or others, there's no dry hole. So that was the marketing pitch, where you're not taking this enormous exploration risk, where we might spend $10 million on Deepwater to try to find a 50,000 barrel per day well underneath the ocean floor, and we hit a dry hole and we're out of the money, no cash flow. So that was like kind of the pitch that was done, but they're not generating free cash flow, like you said. So it seems like essentially a Ponzi scheme, where the insiders basically are going to have to cash out soon because they don't want to be left holding the bag. They have their stock options and they have their revenue targets to meet. But the long-term investors in this are going to be left holding the bag because there's no free cash flow or dividends.
Well, yeah, and it just couldn't be more obvious. And so I think we have to chalk this up to either something happened. The Dallas Fed allowed regional banks that had issued this debt to evade mark-to-market on many of these debt holdings a little over a year ago. So I found that a kind of a skunky move. That's just listen. If the Federal Reserve wants to come in the depths of a crisis in 2008 and suspend mark-to-market and go to fantasy accounting because it's a huge systemic emergency, I can sort of wrinkle my nose and say, oh, okay. But when they're starting to do it on a case-by-case regional basis for a non-systemic sort of a situation, it means they've gotten really activist, they've gotten really interventionist, that they're really down there thinking that they have to control every possible thing that might maybe look like a negative so that we can keep pretending everything's a positive. It must be that the Federal Reserve thinks things are that desperate that they have to micromanage to this degree, or they've just wandered so far off the reservation of their original remit that they are lost and they have no clue what they're up to, and they're just wobbling around, just trying to control every possible unfavorable thing, as if we were such fragile individuals in this country that we couldn't possibly stand a little tiny bit of bad news, or what we might call reality, in this story.
I think you've hit on something that's very important. I think they're so worried now about a large corporation going bankrupt, whether it was British Petroleum, after the Macondo oil well spill, and their some of their liabilities were absolved of some of them by the government. The government was going to fit the bill for some of them, or the rules changes with the shale oil debt. It seems now one thing I've noticed is, whether it's the European banking crisis last year or in China, which I think China has a huge problem, which could potentially be larger than anything else. There's over 26 trillion in RMB, according to some hedge fund managers, and non-performing loans over there. Yes, their banks are 90% of their banks are owned by the Chinese government, but there's going to have to be bailouts, because the people who made the loans were essentially forced to make some of the loans, and the loans aren't performing. So it seems the economic and political elites, Chris, all they can do at this stage is just basically change the rules to keep things going, to maintain confidence. And when you're playing a game and people have real money at stake, it's not fair at all. I feel like I'm Charlie Brown, and the people in power are basically Lucy, and they've pulled the football after I'm trying to kick. Or the other analogy is that you've already kicked the ball and it's up in the air for a field goal, and then the goalpost get moved to make sure the ball doesn't go between the goalposts.
Yeah, that's exactly right. And And the uncomfortable thing that's lurking under this, and the reason I feel you see so much social unrest and you see so many people who are angry, they're angry at the wrong people. They're pointing fingers at the next nearest person on the street, wrong people. What you really need to be aware of is there's a system running that is basically extracting wealth from pretty much everybody and handing it to a very, very tiny elite. And that's why they've been able to do this for so long, because the same tiny elite make the rules. They're the ones who decide where the goalposts are. They're holding the footballs. So of course they don't complain. And of course, there's nobody in Congress or the Senate who's going to stand up and say, this is outrageous that, Ms. Yellen, that every time you seem to do something, these 18 people over here get fantastically wealthy and these 18 million get poorer. Can you please explain, right? And this is something people need to understand. The wealth, the creation capabilities of the Fed is zero. They print money, and when they do that, it's real money and it has real purchasing power, but you can't create purchasing power out of thin air. Purchasing power is real people making real goods, right? So when the Fed creates money out of thin air and hands it to a very tiny elite, where did the purchasing power come from that they actually so-called created? Well, it wasn't created, it was transferred. And that's what we see in all the data. How hard is it to get by as a middle class, lower middle class, even upper middle class person? Hey, $138,000 for a family. You are on the poor list for housing in the San Francisco region right now, according to the district managers there, right? So really, 138,000 and you're poor? That's because of the system we're in. The system and the Fed is the defender of this system, which extracts wealth and purchasing power from everybody and keeps handing it to the few. And that creates social tension. It makes people angry. It's unfair. We're monkeys deep in our brain stems, and we don't like unfairness. And so this is really the Fed's been playing with fire. They're not just playing around with a monetary policy and balance sheets. They're playing with the social contract that is the glue of a nation. It's a horrible crime that they've committed. And whether it's a crime of oversight and negligence or it's actually one of crass self-serving interest, I think that they should be held to account at some point.
I agree. And both political parties are also protecting the status quo. So is the bureaucracy and a lot of the regulators. They're protecting the large companies already in power. We're not seeing any banking executives or large corporate CEOs who there's tons of evidence that they committed fraud. We're not seeing them go to jail for fraud. We're not seeing criminals like Hillary Clinton or so many other people in the Democratic Party who have committed clear fraud go to jail for fraud. People in the Department of Justice are not being prosecuted. I mean, President Trump, he took advantage of this during the campaign, ran on the rhetoric saying, the Federal Reserve's creating bubbles, they're manipulating interest lower. Here he gets into office, he wants low interest rates. He claims to want a $1 trillion spending program on infrastructure. I think the only way they're going to be able to afford that is not on tax cuts. They're going to afford that on, Federal Reserve basically printing more money and probably keeping interest rates lower. Unless the Federal Reserve decides they want, Trump out, they want him to be the bag holder, and then maybe they let the stock market crash temporarily. Maybe they boost the interest rates a couple more times so they can blame everything on Trump and get him out of there because he's not, part of the club.
Yeah, it's always possible. There's a very large group of self-interested people, which spans parties. I don't even do the whole Democrat-Republican thing. I haven't for a long time because I can't differentiate between their actions. There's a little bit of word difference at the outer edge, particularly during election cycles. But when you get right down to it, every single vote is the same vote. It's a vote for corporate interests. It's a vote for a loss of individual rights. It's a loss of privacy. It really, you can't get anybody. You can't get anybody in the Senate or the Congress to think that, possibly maybe civil asset forfeiture is a really bad law. Of course it is. It's horrible. It's a horrible, horrifying law. It's against every known law we have. Either upend the Constitution and rip it up, or amend it, or do whatever you need to do. But you can't look at the trajectory of all of this and not come away thinking that both parties are the same party, which is basically the party of special interests that are working against the everybody's. And of course, the everybody's are getting mad, and I get that. But, it really shouldn't be the left against the right, swinging sticks at each other, because that's just not actually where the cause of the misery is coming from. It's misdiagnosed completely.
Yeah, I completely agree. And both political parties, they believe in the economic advisors that use Keynesian economics. So yes, they have cosmetic differences on certain social issues here or there, hot button issues that the media, mainstream media, tends to overplay. But their economic policies are essentially, big government, either tax and spend or borrow and spend, or a combination of these things. And we have just a rapidly growing welfare warfare state that we can't afford anymore. So, and the middle class, like you said, is just getting destroyed. I think that's why a lot of people, Chris, have given up. A lot of U.S. retail investors, not sure about people who follow your work, but a lot of people listen to my podcast. People are selling their gold, they're selling their silver, they're selling their mining stocks now, probably when these things have bottomed. And, they're chasing Bitcoin, Ethereum, Litecoin, these initial coin offerings they're doing. They're pretty much moving all the money into that because they don't think it's as manipulated as gold, silver, and mining shares.
Well, they might have a point. I would just, caution anybody to understand that that eventually they will be. That's another sort of sweep of history. I don't know if you saw, but the Department of Homeland Security came out and said, "Hey, we think Bitcoin's actually legitimate, and the reason for that is because we can start to track this now." So this whole idea of cryptocurrency does not involve the idea that your transactions are encrypted and somehow kept out of prying eyes, right? In fact, quite the opposite is true. Anything done digitally is exactly the most visible thing in the entire universe. So yes, there will be. I think there's some interesting plays there in ways that these coins could be used. But one of the things they're not going to be good for is preserving anonymity. And it's one of the reasons I am a big proponent of cash. If there's certain purchases, I don't want anybody tracking because I don't think it's anybody's business. I don't want Facebook knowing what I'm up to. I don't want, Procter and Gamble knowing what I'm up to. I just don't, for a lot of reasons. But maybe I'm old school, maybe people don't care anymore, but I certainly do.
They've set up the banking laws now, Chris, where if you take out like $500 or $1,000 out of your checking account, you go to the teller is going to look at you like you're a felon or a criminal or a terrorist. I mean, it's gotten ridiculous to this point now.
Yeah, and let's be clear, the war on cash is really because the keepers of the system don't like you to have any ways of evading their predations. They want you completely locked in. They want you in the corral. And that's their motivation. We're under a regime of extraordinary financial repression. It's only got a few elements to it, right? And negative real interest rates is one of those. And during every single other regime of negative interest rates in all of history that I can find, commodities did really well. It's just such a miracle of happy coincidence for the Federal Reserve that 2 weeks after they started QE3, the most expansive monetary policy ever done under an extraordinary regime of negative interest rates and monetary printing combined, that's the exact moment the entire commodity complex, including gold and silver, started getting whacked mercilessly. So yes, if people want to look at that and say, look, they've pounded this, they've forced me into this corral. I don't like it in here. I want out. I am totally sympathetic. I just want people to be aware that if you jump out of the frying pan, sometimes you end up in the fire. I'm not clear that I am personally suspicious of the cryptocurrencies, as they are allegedly called, simply because they've been given such a free pass by the authorities. Every other thing that looks like a competing currency to the federal government has gotten squashed mercilessly. This one was given a complete green light. Little suspicious, that's all.
Yeah, I own some Bitcoin for full disclosure. I haven't sold it. I haven't sold any ever, so I bought it years ago. But what is worrying me now is, these initial coin offerings, these things it's starting to get to the technology bubble. I spoke to a cryptocurrency expert who's been involved in Bitcoin since 2010, and there's like a flood of these initial coin off. If people think there's a lot of initial coin offerings now, coming down the pipe the next 6 or 12 months, there's going to be, tens of thousands of these things coming out of the woodwork. So Whopper coin, yes, there's a billion tokens of that from Burger King in Russia, but there's going to be a lot of these weird types of initial coin offerings coming down the pipe. I'm a free market guy, but I just want to warn people out there that, probably a bad idea to go all in on any one thing in the environment we are, where people are, the economic and political elites are changing the rules. So putting all your money in gold and silver or all your money in Bitcoin or cryptos is a very dangerous environment, very dangerous.
Absolutely. Always good advice to be well diversified. And of course, we have to just stay alert that they're going to keep moving those goalposts. And they have to, because I think we're kind of down to the wild cornered animal stage. We've got global debts that are off the charts, and we've got unfunded liabilities and off balance sheet obligations that are 10 times higher than that, depending on how you count them. And so it's a really extraordinary situation. There is no mathematical way out. The only question that has to be resolved that has yet to be asked publicly is who's going to eat the losses. And right now, the elites are saying, hey, we think it should be everybody but us. And everybody but us is starting to get a little antsy by that. And we're going to see more social unrest come up because it's deeply unfair. But there's no possible way for all the debts to be paid as they stand and are configured right now. It's just not possible.
Yes, and in the crash course, you talk about exponential functions. So that's what we have right now with the debt in so many different countries. The central bank balance sheets are essentially exponential functions because once they, I actually was researching, bailouts, and the first major U.S. bailout, I believe, started in 1970 or 71. It was $1 billion for the railroads. And if you go back and look through the history of bailouts in the U.S., it's just kept going exponential. After the 9/11 and the airlines needed around an $18 billion bailout at that time. I mean, the amount of bailouts has just exploded. So we've gone to exponential function, and it's going to be very interesting going forward. I think we're probably 2 or 3 years away from some type of global financial reset. There's just so many, there's the global economy at this point is one giant economic minefield, and there's just so many landmines. So you have the subprime auto loan bubble. That was in 2008, Chris, it was only $2.5 billion a year in subprime auto loan sales in the US. Now it's 10 times in less than it's grown tenfold per year in sales to 25 billion a year in less than a decade. And there's just so many other, money and credit bubbles all over the global economy.
Absolutely. You have that just right.
Well, Chris, I really enjoy your work. If our listeners want to follow more of your work, how do they do so?
At peakprosperity.com is the main website, and you can follow me at Chris Martenson at Twitter. I got a Facebook thing going as well, but Peak Prosperity is the place. And by the way, right now I'm still tracking all the impacts of Harvey. Right now we're trying to figure out what's happening with the refining and the possibility of gas shortages, things like that. So we're always sifting around and scouting for the information that people need to know.
I'm not sure if you've seen this yet, but I'm getting reports from some of my listeners in Dallas that the gas stations, there's long lines there in Dallas for gas, and the prices are going up, and there are already being shortages there of refined gasoline in the Dallas area. So yep, we're gonna pay for it at the pump in the short term.
Yep, I've certainly seen that. That whole region lost roughly 60 to 70% of its fuel source capacity. So it was going to have immediate impacts. The only mystery is why the governor hasn't said a thing about it yet. Even, this is Labor Day weekend, for goodness sake, one of the prime gas guzzling weekends of the year. So anyway, it's just a very mysterious situation that they've just sort of allowed that to unfold. So I guess they're going to go with let people, duke it out in shortages rather than try and manage it, which is fine. But we'll see how that turns out.
Yeah, they're already starting to threaten to arrest people for price gouging, and so some people were trying to capitalize on this and sell gas for $20 a gallon. So it's just interesting seeing the government try to fight back any people that are trying to solve a shortage.
Yep.
Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.